Hello, everybody. Thanks for tuning in. Let's see what happened in the market today. And it's the first trading day of the new year. Looks to me like things could be turning over, meaning they're about to go south, meaning they're about to go down. So we'll look at that. Oh, look at this. You're probably still eating too much sugar. Wow, there's a profound article. You're probably still, everyone knows they eat too much sugar. I guess it's kind of a good prelude into trading, right? Trading is about having good habits or bad habits, just like eating is about having good habits or bad habits. The difference between someone who's in shape and someone who isn't is habits. The difference between someone who's a successful trader and someone who's not a successful trader is bad habits. And as a matter of fact, you can take that from someone who is a vastly greater authority than me. I'm going to just while we're at it here, I'm just going to bring up this article from the Wall Street Journal. Long time ago, but I was there, and I actually literally remember this. So Steve Cohen is one of the greatest traders in history, if not the greatest trader. And if you read what he says, he talks about, well, hey, the difference between good traders and bad traders is habits. All right, now let's see where we can find it. Okay, so, all right, greatest trader in history potentially says, quote, all traders have habits that hold them back. Traders have to face their demons. Bad traders blame the market or bad luck. It's just bad habits. Nowadays, what do bad traders do? They blame market makers or hedge fund managers, so forth and so on. So anyway, I don't know where that started, probably because they put some stupid article on the Wall Street Journal. Let's take a look at the markets because I do think that we're kind of turning here. All right. So we need good habits, but we also want to have a sense of which way the market's going. So the first thing I'm going to do is bring up the S&P 500 ETF. Symbol is SPY, which is where the name SPY comes from. And we're just going to go up here to the recent picture. And as we can see, pretty significant move lower today. It was only about 50 basis points, which really doesn't, in the overall scheme of things, is not that much. But a lot of times something can have a move that might not be that big, but it can be important. Now, what is an important move? Something that fails at resistance, something that breaks an uptrend, vice versa, something that rebounds off of support, breaks a downtrend. So today's move was important. Again, it wasn't a huge move, but I think it's kind of confirming that this uptrend is breaking. All right. Now, if we go look at the technology sector, which is the biggest sector in the market, so the action here is like really kind of bad. Now, if you follow me, or I should say us, because I have other people involved here, well, we talk a lot about price levels. We've talked about this 186.10 price level for the tech sector ETF. Why? Well, it was resistance back here. What was today's low trade? 126.25. Sorry, 186.25. 15-cent difference. Now, if you knew where these levels are and you were watching this market, when we got down to around here and you started to reverse, you would have said, hey, we're reversing off of an important level. There's a good chance there's some follow through. Why did, after making a big move this morning lower, did we open around here? Well, gap and lower. A lot of sellers are coming in. Just turns out that there's buyers around this particular price level here because there's a lot of people that sold on this day who regret doing so the next day when the price was higher. And then when it finally gets back to the level, they go out to buy. So the sellers are coming out in droves, but the buyers come out of the woodwork right around here. So knowing where the price levels or the important price levels are, is a big help to understanding what the market's going to do. Now, we've been talking about this, so this isn't a surprise. I mentioned this over the weekend. Apple had been trending lower, just blew right through at an important price level here. 190 was resistance, it became support. How could resistance turn into support? Clearly, it happened. Well, there's people who sold here and price goes higher. They're like, If I can buy my shares back at this price I sold them at, I will. The whole time the price was lower, they thought they made the right decision. But when it finally goes higher, a lot of them say, if I could buy these things back, I'm going to. Assuming I can get them at the same price I sold them at. So remorseful sellers placing buy orders could turn resistance into support. So obviously action there is weak. This is the type of action that's so weak, there's probably going to be some follow through. Look for some support down around here, like 180, 130 or so. Probably going to get a bounce there. NVIDIA failed at this important $500 level we've been talking about. Why is there resistance at 500? This is what we call a psychological level. People say, hey, if it gets to 500, I'm going to sell it. You've done it. I've done it. No one says if it gets to 503, I'm going to sell. If it gets to 494, they say if it gets to 500. So when we get resistance or support around a level that's really not important for any other reason, then it's a nice round number. We call that a psychological level. Anyway, a lot of big supply or sellers above where we're trading in NVIDIA, so this could keep a top on the price. In other words, every time the buyers want to come in, if they got to drive the price up, they get to 500. All of a sudden, there's enough supply. When the market's moving higher, the buyers can't find all they want at the price they want, so they got to pay a premium. They might come into the market and say, hey, listen, I got to buy 50,000 shares, the 480 top. Someone might say, okay, well, you know what? I'll sell you 50, but ain't going to be at 480. It's going to be at 480.20. And then the buyer looks around. There's no other sellers. They say, okay, we'll pay that price. That forces the uptrend, supply and demand. And then Microsoft. Failing off of resistance that it's been under for a month and a half or so here. All right, so that's a little bit weak. Actually, it's a lot weak. I'm sorry, just pointing it out. Healthcare had this big move higher today, and there's some follow through. But this is just a couple stocks that are really overstretched. It's almost like panic buying in these things. There's no news. There's really no logical explanation for this. Well, there always is if you think about psychology, but it almost seems like panic buying. This is propping the healthcare sector. If it wasn't for the healthcare sector being up big today because of this overextended action, the broader market would have been even weaker, right? The market's the sum of its parts. Now, the part that's the healthcare sector really kind of propped the market up today. Within the healthcare sector, we have various industries. One of them is these biotech drug makers, and these things have gone crazy. And I don't understand why. Well, I do understand because people are illogical. I guess I'm just trying to be theatrical, right? By conventional wisdom, we don't understand why. Psychology, there's people that are probably like, damn it, I was hanging out with my Uncle Larry, Christmas dinner, or, Hanukkah dinner, or whatever holiday you celebrate. And it's like, he kept saying, I told you should have bought Merck back in November, and you didn't. Now it's up. So you're like, you go to work and say, all right, I'm going to just pay any price, blah, blah, blah. And it just gets jacked up, and you're the guys who are the last in the line. And once you're done buying, there's no one left to push the price any higher, and it just comes right back in. So we can start looking at some of these stocks as a catalyst for the big reversal, which I anticipate we're going to get. Our sentiment signals were just so out of beef. I mean, look at that. That's crazy action. Considering there's no news. Just remember 2 weeks ago we had this biggest inflows ever to the S&P. What does that mean? Well, if the vast majority of investors are bullish, they spend their funds. When they're done spending their funds, the market can only go lower. It runs out of buyers. Excessive bullishness is bearish for the market. All right, everybody. Thank you so much. I appreciate you hanging out with me, and I hope to see you soon.